We have another cool CPI print that came out today. We're going to be discussing some of the underlying data there, getting into how the markets are moving, what this means for the Fed ahead. Before we do all of those things, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are certainly not financial advisors. We're a few guys who love following the markets, think that there may be some shenanigans going on, but do your own research before making any buys or sells. Kev, we're in the midst of a vibe session right now.
Oh,
We had
right.
CPI data come out today. We'll talk about that later. But CPI data came out this morning. Some of the numbers on the headline side of things for the CPI was a 0.2% month over month. That was below the 0.3% expected. 3.3% increase year over year. That was below the 3.1% expected. If we look at the core number that strips out food and energy, we have 0.2% up month over month, also below the 0.3% expected, still at 4.8% year over year versus 5% expected. And that's where a lot of people still are not, everyone's getting excited about the headline number. Like we said on yesterday's show, there's more to it than the headline number. What I looked at today, the first thing I wanted to see was shelter, because we discussed that on yesterday's show as well. That came in at 0.4% month over month, which was down from 0.6% the previous month. And it is still at 7.8% year over year. And that is with mortgage rates still high, inventory on homes down. So rent could still be going up. If we look at the headline number for CPI, let's take a step back and remember that a year ago at this time, that number is so much lower because of food and energy, right?
Mm.
Which is stripped out in core. And that's why people need to focus more on the core number. This time last year, oil was over $100 a barrel. It's like 114. It was wild. And so there's a reason that number is so low and had such a big, month over month decline, being at 3.1% versus last year or last month, it was at down 4% year over year. Like there was a huge increase in energy costs last July, and that definitely impacted it. And so to get excited about the headline number, I think is a mistake. Now, if we look at the number for shelter, if we look at the fact that core is down under 5%, that's making some progress. And could we see this progress compound? Yes. Now, we still have high expectations for 25 basis point hike in 2 weeks. It's looking like about 90% chance that happens. However, the probability for an additional rate hike after that has come down substantially if we look at the Fed probabilities. So curious what your take is on the numbers, how the market's responding, what you think the Fed is going to do.
Oh, I think you know exactly how I feel about the numbers. I think that headline is one big LIE, is what it is. Again, I think that the data underneath the headline is the most important. And at some point, I do question some of those numbers too. I guess that maybe I'm just being a little bit skeptical. Again, I just don't believe that inflation, even if we do the headline number, it came down, what, 3.1% was the expected target, and it came down 3%. Every month for the past few months, it's just been doing exactly what it wants it to do, maybe even better in some instances. So I don't necessarily buy that. I think the important stuff is underneath it. That's the stuff that no one's, talking about. But, the headline is all that people see, and they get excited because what are we looking for? 2% terminal rate or 2% for inflation. So 3%, not too far off, right? But I don't know, man. I don't believe that one bit. We have to look at that 4.8%. Still pretty high, right? For core year over year. I think the market's reacted pretty maybe irrationally a little bit for TradFi. I think the Dow is just something that's been rallying for the past few days, kind of going into today. I think they were expecting maybe a better number than anticipated. I think crypto was the one that rallied into today too, but I think that they're having a bit of a reality check when we're looking at some of the, resistance that we're finding at some of these levels that we rallied into. So again, it's like, I think markets reacted fast at the open, but as they went on, maybe they realized that, hey, these levels are pretty high. Maybe some people are taking profit. I think crypto definitely saw some distribution where people are selling off around these levels. But yeah, I don't necessarily think that the markets took it as they didn't take the bait. I think for crypto, for TradFi, I think they definitely are expecting this to keep pushing forward.
I mean, I think what we're seeing with crypto versus TradFi, if you look at overall market sentiment of the two, if you look at trading volume of the two, institutional money that has been sidelined is obviously choosing to push heavier into tech as opposed, in the TradFi market, as opposed to coming into crypto, which is in much murkier waters with everything going on with the
Right.
SEC. So it seems very clear that the institutional money that is absolutely needed, because right now there's not enough retail money to meaningfully move the crypto market, right?
No.
Like there just isn't. We look at people's disposable income. We can talk, here in the coming months with student loans coming back, but there's not enough retail money to move crypto. It would have to be institutional money. And institutional money is making their choice of like, hey, tech still has high upside, but it doesn't have the same risk, regulatory risk that crypto does. So why would we bother with crypto until there's more clarity? So do I think crypto is going to have another run, another great cycle? Yeah, absolutely. But if you look, like we've shown with the volumes, with the funding rates, there's just not as much interest. Like there's no interest from institutional money. Did some of them buy when Bitcoin was in the 20s or high teens last year? Potentially. I don't know if they're still holding it or not, but I don't think that at these price levels, there's as much interest from the institutional money in crypto.
Yeah, I mean, that's a great point, right? SEC and all this clarity that needs to be made in the United States, obviously tons of assets being listed as securities. It's definitely put a damper on a lot of things, especially their cap for how much they can potentially grow until we get some of that clarity. TradFi, I think that right now we see that there was, the word of the year, I guess the term of the year is AI, right? That's since January, we've kind of been like, oh, what's AI? What's AI? People have been buying into these stocks nonstop. And we see that there is this excitement and, there's tons of volume coming into these stocks. So obviously, if there's tons of volume, there's tons of opportunity to make money. That's why price continues to push up. And there's a lot of people who are, understand that this is a bubble and maybe they're shorting it. But again, by there being more volume in TradFi than in crypto, that means that there's more opportunities for liquidations. I believe it was June, what was it, 96 billion or something like that in terms of liquidations that people saw from short sellers. Like it was an insane amount in TradFi. And, you're not seeing that type of liquidation of events in crypto at all. There's just not enough liquidity. So, yeah, I definitely think that, they're taking advantage, maybe pushing this up a little bit further off some of this data. I mean, obviously, headline numbers, yeah, it's going to definitely trick some people into thinking that we're in a bull market. But for the most part, the two are definitely finding some divergence. And I think, again, we talked about this on a show maybe 3-4 weeks ago, but volumes are important when it comes to trading in some of these markets.
Yeah, absolutely. One thing I did find, a couple things I found interesting. Number one, we had talked about Riot a few shows ago. I saw a report today that Vanguard had bought 640 million in 2 Bitcoin mining stocks, one of them being Riot. So I think it was Ace who was asking us about that one. Good call there. And then if you want to real quick pull up the chart for the symbol is RXRX. This is a pharmaceutical company that is getting, I believe, some. Yeah. So news came out this morning. It shot up. It's still up. The stock is up 76% today. It was up over 100% at the open. And if you look out longer term, it's been pretty flat for the last year or so. But they're getting money from NVIDIA to kind of do some pharmaceutical AI work, some assistance from NVIDIA for pharmaceutical AI. And so that was a pretty interesting one that saw a massive candle up to start the day. It's still well over where it was yesterday, but it's a pretty crazy chart to look at.
Yeah, that's a massive gap. That's right here. What is that? What was the open at today? The open was at 1466. Where was the close yesterday? 678. Oh my goodness. Let me just measure this gap real quick, because this is the type of stuff that absolutely sucks to get trapped out in or get stuck with. And then we go here. So this yellow rectangle, let's go from here to there.
Ace, how we doing? I was just I was singing your praises on the Riot purchase, because the story came out today. Vanguard bought hundreds of millions of dollars worth of Riot. So well done there. And then we're looking at a fun little stock by the name of Recursion Pharmaceuticals that saw a ridiculous gap up this morning. So that's giving you a quick update on where we are. Let's talk a little bit more kind of with these numbers, and I'm going to pull up on my end the rate probabilities for the remainder of the year. At this point, we can go with a 25 basis point hike in July. There's really no more data. This was the last piece. Today's CPI was the last piece of meaningful data before the next Fed meeting, and the number is still high. The core number is still 4.8%. So they're going to hike again. But if we then look at the meeting dates, we have a CPI print in mid August for this month, and then we'll have another CPI print in mid September for August. So we'll see those two. I still think we're going to see a bounce back of inflation at some point. It would not surprise me, based off what we discussed earlier with the price of oil last year compared to this year, if we saw the headline number come in higher in August than it is right now. If it was at 4% the previous month, it was expected at 3.1, came in at 3. It wouldn't surprise me at all if we see a number of like 3.5, 3.6 next month. So I think that's one thing to keep in mind. And if the Fed sees that, and if God forbid we see the core number, and what really is going to matter is that core number, right? If we see the core number come back hotter next month, because this is the same thing that's happened with the PCE number. It's gone back and forth between like 4.6 and 4.8. If we see a situation where core goes back up to 5 next month, maybe it goes back down again. We'll have to wait and see. But I think the Fed is still just in such a weird place right now. And to think that we are completely out of the woods, there's a lot of tea leaves that need to be read that would suggest otherwise.
Yeah, I couldn't agree more. Again, I know I keep kicking this.
If we're getting the right data, if we're getting accurate data.
Exactly. I still think that we're going to see something happen with energy in Europe. I'm sorry. The U.S. can say that inflation is coming down, but when I look at Europe and see how bad the Eurozone is across all those nations, it's absolutely insane. There's like a huge disconnect between our part of the world and their part of the world. I know there's a war going on. That's a lot of attributing factors to why they're seeing inflation. But I don't buy it. And the one thing that I think a lot of people haven't really, talked about is obviously the stuff that's going on with Russia, China, and, the Wagner Group. So apparently Putin's talking with the leader of the Wagner Group again. And he's nestled right behind Kiev in Belarus. That's one thing that we have to keep an eye on, right? So they pretty much just got the good, all the way around through Belarus, right behind Kiev, so they don't have to go through the entire country of Ukraine. That's one thing to keep in mind. Second thing to keep in mind is China is buying liquid natural gas like crazy. So last time they did it was when we saw that run up all the way to around $10, and they're buying it once again. So I'm not telling you to buy natural gas, but natural gas right now is at $2.58, and I know that China is going to be the lead importer of natural gas this year, which is insane. They're going to be a huge supplier. So I do think that we are seeing something that's coming when it comes to energy. That's one thing I'm definitely keeping an eye on. Do I know that for sure? No, but I understand that there are narratives that are being built around the facts that are, we are getting. I believe in that scenario more than I believe that inflation is coming down to 3% headline. Again, that just coincides with everything that I'm seeing in Europe. We can't forget that this is a global recession that we're kind of in. 5-session recession, whatever the fuck we're in. I don't think anyone really knows what to actually call this, but I do think that we are seeing like that huge disconnect between us and Europe, and I don't think that we should be. I think that we are, we're fudging stuff over here a little bit, but maybe that's just me ranting right now.
Sometimes we got to rant, to dig through some of the bullshit and get to what actually matters. So we have earnings starting up here soon. That's where all the attention is going to go now with the Fed meeting, in a couple of weeks and the expected 25 basis points. We're going to take all the focus will be on earnings. One thing that has been really interesting is, especially from a lot of the financial companies, the tone that they are setting, trying to lower expectations ahead of earnings. We've seen it with Goldman. We've seen it with others where they are trying to signal that earnings may not come in as well. And is this just to kind of get out in front of it because they want to save face? Are they trying to manipulate prices, right in front of us? I'm not really sure, but it's something to be aware of. Goldman reports next week. We have JP Morgan this Friday, I believe, before the markets open. Analysts are rating them at a buy right now, expecting that they're going to see, continued revenue, more deposits. They acquired First Republic. Maybe they're going to acquire more small banks in the future. I wouldn't be surprised by it. As a JP Morgan customer. I can't really stand them, but it's my best option right now, unfortunately. So, before we dive into the charts, is anything else catching your attention right now?
Yeah, I mean, I think you brought up a good point talking about earnings in banks. Obviously, you guys know that I'm also extremely skeptical on banking right now, and I think that we saw something pretty important today. Uh, we saw that the Minneapolis Fed president, what's his name, Kashkari, he proposed a new high inflation stress test to see which banks could face risk if inflation stayed elevated. I think the Fed knows that inflation is going to be here for a period of time, right? They're also going to have rates extremely high. So I think that they're doing this stress test to make sure that, or maybe even as a, precaution to see how this would affect, some of the banking institutions. I still think that a lot of smaller banks are probably a little bit overexposed. They might be in some pain. We haven't seen too much news about the banks recently, but we also know that there's a lot of larger institutional banks such as, Bank of America, who actually I'd be really interested to see how their earnings come out. I think whenever it is, I think it's not next week, or might be next week actually, Bank of America. But
Well, as long as they keep opening accounts for people and charging overdraft fees on them, their numbers should look fine, right?
trust me, I'm a Bank of America customer, but I don't have much cash in it right now. But it might be just because they have, I think it was $100 billion worth of losses on a balance sheet. That's no small sum of money, right? Um, whether those losses become realized or not, who that remains to be seen. But there's a lot of these banks that are still in pain, and if rates continue to stay extremely high, and inflation is I don't know, maybe if we start telling the truth and inflation actually shows that it's kind of being more sticky than we are anticipating, then who knows? Maybe we start to see some banking crisis again. I think that banks are something that we have to keep an eye on because all the bank stocks to me look like shit. I'm sorry, they just do. I think that we rallied up, but at the same time, the moving averages are too close to each other. And yeah, I agree, Ace. But it's insane right now just to think that banking is just fine with 7%. And also, how are consumers going to be okay? I mean, sure, the economy and inflation might be coming down, but also consumer credit, debt, you got student loans piling up. You can't really get rid of student loans, right? Even if you go bankrupt, that's the one type of loan that you still have to pay regardless. It's insane, but how many of these kids do you think are actually going to be able to pay some of these loans off? Again, we're not talking about a small sum of money for a lot of people. We're talking about like probably close to like 40 plus K for a lot of people that still owe it. I think it's close to $1 trillion worth of debt in total. So, I mean, there's just a lot of money that is
I mean,
being owed.
we got to get
Go ahead.
we got to give the bull case though, which is with this headline number today. And as much as you and I just don't value the headline number from what the Fed is going to do, it does impact people's bank accounts. The headline number is now meaningfully lower than wage growth over the last year. We saw wage growth when it last was reported came in at 4.4%. That's meaningfully higher than the 3% for inflation. So we're also in this weird spot where the Fed has to keep hiking to get those numbers under control. So there's bearish and bullish cases to be made everywhere. I still think it's one of these times where being a long-term investor and having your times when you want to DCA in, having these times when you want to add stocks and continue to add assets to your portfolio is probably a good thing because we don't really know what's going to move it next. Like we can speculate all we want, but as long as people continue to be seeing increase in their wages higher than what inflation is going to be, the Fed is going to feel the need to continue to hike. We're going to continue to probably see earnings come in okay until we've reached the point where the job market takes a hit, and we just don't know when the hell that's going to be.
Yeah, it's true. I just don't. I don't know. I don't know anymore, Joe. We're in a vibe session.
We're in a vibe session, and this is what this is when shit can get weird, right? Like we've seen the last few years have been like, we'll look back on this in 3 or 4 years and hindsight's gonna be 2020, but it's between the COVID crash, the COVID recovery, the crash of early 2022, the recovery of early 2023. I mean, it's a really weird time. It's unprecedented in our lifetime, and it's just something that people have to, are going to have to survive right now. So all this B of A news, yeah, it's super messed up. The fact that they were opening accounts and then charging people fees, I believe, and they're going to have to pay what was the number on the fine? Like 250 billion or something, or
Yeah,
150,
I think it's
250 million, or whatever the hell it was.
250 mil, I think. But yeah,
Yeah,
it's
250 million. Um,
they'll be
that's
fine though.
fucked up.
I mean, unless they're
Yeah,
Lehman
of
Brothers, they'll
course.
be fine.
Of course. No, they'll be just fine. They'll be taken care of. Let's see. Ace. I'm looking at stocks and commodities that will be needed or used no matter how painful it gets. There's money to be made always. Yeah, I mean,
Agreed. Yep.
defensive positioning is not a bad idea right now.
Not at all.
Especially with some of these defensive position stocks that also pay a nice dividend. Like, I know dividend stocks don't, traditionally have as much upside, but having consistent cash flow that you can just, because you could very easily just put money in those dividend stocks. When you get the dividends, then put that into something riskier. That could be a DCA strategy right there.
For sure.
If you're not looking to rely on that money anytime soon, you want to grow your portfolio, go that route. Buy a Home Depot or a Lowe's. I mentioned yesterday is like $2.19 a share is gonna be the dividend. But for Home Depot, $1.10 a share dividend for Lowe's. If you want to get some shares of that and then start putting that money into something riskier and DCA that way, I think it's great. But trying to time it right now, it's tough, man. I want to get as much bang for my buck, which is why I'm okay, like with my current strategy of having my long-term holds and having some in cash to buy when it bleeds. But I don't know. Me personally, you do your thing, Kev. I would not want to be in all cash right now because I just think it's really, you got to have balls of fucking steel to be all cash right now, and having that level of conviction is tough. So good luck.
Yeah. So I mean, I'm not in cash right now. I'm like, I would say 5% cash, 95 being shorts. And
Okay.
again, I'm fucking crazy like that when it comes to my conviction. I honestly don't believe this is getting better, and I think a lot of that is because I don't believe people who had huge amounts of Bitcoin and stuff like that are going to be selling the bottom, and then retail is going to be the ones who win this. It never turns out that way, right? Retail definitely didn't win in 2008. They didn't win in 2000, 2002. I don't think they're going to win in 2023, 2024. I'm sorry. But again, that's why we try and be as truthful as possible and tell people what we're seeing, what other people aren't actually talking about. But for me, I still think that crypto has a huge way down. And we could look at some of the charts and stuff like that. We're seeing some of the pullback that we were talking about yesterday. We hit that resistance. And the one thing that I think defensively, again, I'm an asshole who really thinks that this is going to happen, but natural gas, I think, is not necessarily a bad buy. If the Chinese are buying, there's definitely a reason why they're doing that. And if the price is still decent, maybe I can try and get on some natural gas. That would be like the only defensive thing that I would be looking at right now for the maybe next coming 6-7 months.
Okay. We got a few minutes left. We're actually starting to see markets come down a bit as we close out the trading day. The Dow is now almost flat on the day.
Good. It needs to.
Yeah, it was, started the day, it reached its peak. It's down about 260, 270 points from where it was earlier. So we're seeing, I think people are using the move up earlier in the day and taking that as opportunity to get some profit for today's trades. But let's take a look at a couple charts. If we want to look at the DXY, that one has gotten absolutely shit kicked. Just over 100 now. 100.566 is what I'm seeing. We got the VIX down at 13.79. It was closing in at 13.6 earlier, but that's popped back up just a little bit. What do you want to look at as we close out today's show?
Yeah, let's look at the DXY just because we were talking about a triple dip, a triple bottom. We clearly hit it and we went right under it. The dollar is just absolutely eating
You got to pay extra for that.
Yeah. It's the dollar's just been tanking today, right? And again, we talked about this yesterday. The CPI data has been killing the dollar every time. And it looks like we lost a little bit of support. However, this is on the weekly chart I'm looking at right now. I would like to see how this week closes. Obviously, we have 2 days, 4 hours before that happens. If we close above this 100.845, that's a good sign to me that we're in a good place. Maybe we trade sideways for a little bit, but this is our yearly low. We've hit it 3 times now, once, twice, thrice, and broke below it right now. But if we look at the daily as well, it's absolutely going to be oversold today. I mean, it's a massive candle down. The thing I would keep an eye on for this would be couple levels of support. So this 99.320, that's one that I would keep an eye on, worst case scenario. And the reason I say worst case scenario is I believe that's where the 200 EMA is as well. Yep. So the 200 EMA is actually a little bit above it now. So let me just move this up. That might be, let's leave it to right there. So we might find a scenario on the daily or the weekly where we, test this level down here and we close above 100.845. It's very possible. I think that this 200 EMA is going to cross right here with this 99.663. We've got a level of resistance here, which offers some support here. And we probably find some more areas where this has been resistance, but we're currently above it. So that's support. So we'll take that as it is. We'll have to keep an eye on that. I don't think the dollar is done with. Again, I think this is just a lot of news that's been hurting the dollar. And again, worst case scenario, if we are putting in a lower low, then we're putting in, lower highs and lower lows. It tends to be a bull flag some of the time. I don't necessarily see one right now, but we could see some formation over the coming weeks and coming days if we start to see some of this lower channel being built out. So dollar, keep an eye on some of these key levels of support, 99.63, the 200 EMA on the weekly. Then obviously this white line, which is the 100.845. I do think that we will get above it again. It's just, CPI days, man, they're just not fun to be a dollar. The dollar just absolutely cries on days like today. Doesn't matter what the data looks like. It's never bullish for the dollar on CPI days. So that's what I'm seeing there.
It's not fun to be a dollar.
Not at all. It's actually a sad day to be a dollar. Let's look up natural gas, because I really, this one is one that's been bothering me, and I look at it and we were talking about it for the longest, right? I was talking about it back here when it was just under $2. I think it went to 190, 192. That was back in April of this year. And we're seeing a pretty interesting structure form, right? This is kind of like a bottom. And obviously we got the 200 going, we got this death cross 50s under 200. So this could be the bottom currently. But I look at this on the weekly, it looks like maybe we have a little bit room to the downside. Maybe this entire buy has just been China pushing the price up, right? But, the daily looks like it's completely, it's oversold coming into the overbought, or it's going to be going towards overbought. And if we look at the monthly is absolutely oversold, right? Last time we were oversold for the monthly is back in March of 2020. We're not at the levels of the COVID lows. However, we did see this massive spike up, right? We saw 1, 2, 3, 4, 5 waves up. And from the COVID low at around $1.60, we ended up at $10.56 at the height. So right now at $2.58, does it look like there's a lot of room to the upside? Sure. But there's also, chance that maybe there's a 50% drop still, that's possible. So I would definitely keep an eye on natural gas. I'm not telling you to get into a position or not. I do think that we are going to see this thing take off soon. I honestly just think that, a nation being the largest largest importer of liquid natural gas out of nowhere definitely seems fishy to me. And again, that's very similar to how I saw all those shorts coming in with Binance, right? There's a reason why Binance was being shorted heavily and those funding rates were really bad. Someone knew something. Someone always knows something. And that's what I'm expecting with this. But, maybe we don't get to $10, but maybe, say, let's go conservative. Let's go to about $2.14, push up to maybe the 50 moving average on the monthly. It's an 83% return. So maybe over the coming months, if something bad happens, that could be profitable. Keep an eye on it. I'm not telling you in any positions. I personally wouldn't be buying here. I'd maybe wait for a retracement on the weekly. Let's see.
Okay.
Let's do some crypto. Bitcoin, right? Yeah, Bitcoin's absolutely going. It was crazy earlier today. Like I believe it shot up to blow up. What was it?
Right. It's so funny. The moment that the CPI data came out, it wicked up to exactly 31 and immediately got rejected.
Is that today? Oh my goodness. I didn't even see those 31 on the dot. Let's see. Height.
Look at 7:30 your time, 6:30 my time. At that exact instant, it wicked up to, am I seeing? Yeah. It wicked up to 31 and then came right back down.
It would be right here.
That 31 level, man, like Bitcoin, I don't know what it's going to take for Bitcoin to break through it.
So this is the thing that scares me about that 31 level. The fact that we keep seeing rejection here means that there's a lot of people who are willing to sell at 31, right? They don't want the price to push up. Maybe they have some positions lower, or maybe they're just trying to offload everything. However, that CME gap remains so stubborn because we're so close to it. We really are really close to it. We're 14% difference. We've seen Bitcoin shoot up $2,000 in a day. We've seen it go down $2,000 in a day, right? There was even one day back in September of last year where it went down $1,000 and then it shot up 1,800 right back, and people made money. So it's really, we're not seeing the same type of volatility because the volumes just aren't there, but we are seeing people just absolutely distributing, getting rid of as much Bitcoin as they possibly can once we get to that 31 level. But that doesn't mean that we can't push up. I do think that we are going to push up from this. I think that we're just trading in this channel. We're consolidating right now. I think that there's plenty of room on the weekly, on the stochastic RSI, for there to be another push to the upside. And again, I'm not saying we're going to be at 34, 35 for a long period of time. I don't think that at all. I think we're going to get a wick up there, and that's going to pretty much just fill that gap. And we're going to chase liquidity on the way down. I think that anyone that's in this market right now either has balls of steel or is, a liquidity hunter. That's the only people that are still here. And you don't have to be smart on the right side of things to have balls of steel. You could be long as shit at 34K, and then it goes all the way down to 9,700. It's possible. But Bitcoin right now, 31K has been that supply zone we're distributing to. If we were in a bull market, then obviously I don't think people would be as willing to sell at 31K, right? I just don't see it. We've also seen this massive run up this entire year. Like, it's a pretty good move to the upside. Let me just get rid of some of these candles right here. And I just want to check one thing. I look for parallel channels. That's the one thing I'm a fan of, because those tend to break to the downside if they're going up. And if they're going down, they tend to break to the upside, right? It's pretty simple, but let's just pull this up here. Get this like that, right? Maybe pull this down a little bit more. That seems about right, though, because we break into it. What would be the top of this channel? 35,000, 34, 35,000. So if that were to play out and we get up there, I think that's where we're going to break from. Just my opinion. I think we have to break through this 31,000 first. It's very possible for it to happen. Just need to see some type of liquidation. Maybe CZ decides to print a bunch of TUSD and it shoots up. But right now, it's just consolidating in this range. And the thing that's really weird is Bitcoin dominance, right? I saw it shoot up to 31K, or it was on its way to 31K. I fell asleep right before it did. But I see the price going up. But Bitcoin dominance was not doing anything that entire time. So it tells me that there's money going somewhere else. And where could the money possibly be? And for me, I think a lot of that money was going into stables. So this is the weekly, but let's look at the 4 hourly for USDT. There we go. Yep. So there's your 4 hour candles. It went from down at 7.16% up to 7.3%. So I definitely think that people are, maybe that's part of where it was at 31%. As soon as he shoots up, they're switching in the stables. That takes away some of the dominance. It takes away some of the money that was going into Bitcoin. And now they're just sitting in stables waiting to deploy it, or, they're offloading it into Coinbase and exchanging for USD. Who knows? But definitely seeing some funny stuff around that level. Keep an eye on that. And again, we could say the same for, all these coins. Like, let's look at Matic right now. We were talking about 74 cents yesterday being, a level of resistance. It was support for the longest. We broke through it and we went all the way down to 51 cents, right? It was back on June 10th. But the problem with that is we didn't get a chance to really test this. So we went right through it. So this entire channel was just for us to push up to try and test it again. And now we got rejected. We're 3% down on the day from where we were. We broke above it for a second. We went right back underneath. And now we're 3% under at 71.8 cents. This tells me that maybe we trade a little bit around this range, but for the most part, I think this is going to break down it's going to break out of this channel, in my opinion. And I think that we're seeing some of that on the daily stochastic RSI. We're completely overbought. It's at 97.92. Obviously, the highest can be 100, but 97.92 is extremely overbought. If this breaks, obviously, I want to see some of the tests maybe closer to that origin of where we started, which is around 50, 51 cents. Not saying it's going to go there instantly, but I definitely think that a corrective pattern is due for this. And the pattern that we got before this was a 5-way move. I think this is some type of complicated either WXYZ or it's just a 3-way move that I'm not seeing. Maybe it's the daily is the worst way to look at this. Maybe the weekly is a better 3-way move to see this, but I do think that we are going to see another 5-way move to the downside. And maybe that offers the opportunity to go long. Maybe. I don't know. I have to see where the structures are forming once we get there. But Matic got rejected from that resistance level. You can see Cardano is getting rejected a little bit right now, right? As soon as we get up to that orange line that we drew yesterday, we wicked above it. Now we're down. We're down 2.5%. You can just look at Binance. BNB got rejected pretty well too, right? BNB comes up to that midline of that parallel channel around 250, which was also a level of distribution that we were seeing very similar to Bitcoin a few days back before it went down to 231. Once it gets at that 250 level, I think a lot of whales are just absolutely selling as much BNB as they possibly can. That's why we're seeing the price get rejected. Again, I still think that this massive green candle that we got on that 1 minute time frame a few days back is absolute BS. And I think that gap is going to be filled, right? We're currently, we'd have to start we're $2.70 above where it needs to be for us to start tapping some of that liquidity that was created by that fair value gap. If we get down to there, that's a ton of money that's probably going to get lost in terms of shorts. People are longing it from there, and then we're at the bottom of this parallel channel, and we're overbought. So it's very possible that we just break below this. Maybe we find some support down here. If you go below 210, it's not good. And the last thing I want to take a look at is obviously, actually, no, we do two things real quick. Solana, insane how much Solana's increased recently. I think it was like 76%. I put out a tweet last night talking about all the altcoins that have been up since the SEC listed them as securities. And Solana's up like 76% or something like that, which is insane. So if you're expecting, bullish continuation, you kind of missed it, right? 76% is a pretty good return in crypto, I will say, especially in a bear market when you're longing something. But we got 5
in a matter of a couple of weeks.
Exactly. Like, it's too fast, too soon. We can see how overbought it is on the daily. Go to the weekly. It's going to be overbought by the end of the week today. And then if we look at the monthly for Solana, obviously it's coming up pretty fast. So a lot of things move fast for Solana. I don't think that we are in a place where we're going to see continued growth. But again, I think we do need to see a correction first before we see any type of consistent moving forward. We got a massive fair value gap right here, between $12 and $8. I do think that we're going to come a little bit lower than the $8 for Solana, but we need a three-way move to the downside correction, and then that we can probably assess whether we're going to go up or down. But right now we're finding rejection on the daily of the 200 EMA. It should be coming down unless we see some type of mass manipulation. Ooh, crypto's all red right now. Interesting. Total market cap for total 3. Look at this. It went right to the 50 moving average on the daily, wicked above it. Now it's below it, and we're just sitting on the ass end of this parallel channel at $329 billion. I think this is going to break. If it breaks, I'm saying $300 billion or less is going to be the total market cap for crypto, excluding Ethereum. If you look at Ethereum, it's already broken out of it. We got rejection from this 200 EMA on the daily after we broke out of this. So that's telling me that the 50 is also acting as a level of resistance support. We're testing this right now. We'll see how this closes today. But I do think that if this is in its parallel channel is breaking out of it right now, there's a good chance that we are going to expect more alts to bleed. My choice of alts that I think they're going to start coming down over the coming days, weeks, it's obviously going to be Ethereum. I think Ethereum is the one that's going to be the one that's going to hurt a lot of people. Do I think that's going to be the end all be all? No, but if that dominance goes down, Bitcoin dominance goes up, maybe that helps us push 35K. Stuff we've been saying yesterday, but we're starting to see some of the rejection finally. It was just going up too fast, too soon, and it is what it is. But crypto, I think the alts are still have another leg to the downside, and I'm not convinced that we're in a bull market just yet when it comes to crypto.
Okay. Kev is doing his best. Kesha, it's going down. He's yelling timber, baby. So I think that is a good place for us to wrap up today's show. We'll be back tomorrow. We will not be doing a live one. Kevin is traveling for work, but he and I will record a show in the morning. We'll post it later on in the day. We'll get a little bit more producer price index data in the morning. However, that has not been particularly meaningful when it comes to movement in the markets. So I'll mainly be looking at the market open tomorrow, what we're seeing there, how crypto responds as we close out the day today, and how the market's open in the morning. So thank you, everybody, for watching. Ace, Randy, appreciate you guys. Whoever else has been watching as well. It really does mean a lot to have you here with us. If you have not yet, hit those buttons down below. Like, comment, subscribe, share us out on social media. I see it, I see when you guys tweet about it, Randy tweeting about us, Ace, all that stuff really does help, and it means a lot. So have a great rest of your day, everybody. Stay safe out there, and we'll see you tomorrow.
Take care, everyone.